Yeah.
And one of the things we position ourselves at is that life insurance is not life insurance. It should be called death insurance because there's no life about it. You'll
The
only
way
ever
it is
see
now, traditionally.
right, right,
Yeah.
and so we're all about bringing life to insurance, and so if you meet the underwriting requirements, we'll give you access to up to 25% of your death benefits on the day you take out a life insurance policy before you've even paid us a premium. And how we're able to do that at a very, very high level is if you have life insurance, as morbid as this may seem, if you have life insurance, you're worth more dead than what you are alive. So we go to that point in the future where we use technology to calculate mortality. We go to that point in the future where we know you are worth more dead than what you are alive. And we collateralize a percentage of that future value and we bring it to the present point and we make it available in present value. So you're accessing and inheriting from your future self.
Now, there's provisos to this, and not to raise objections, but just my listeners will be asking questions. And it's my role to be a conduit to some of their excitement, but also some of their skepticism.
Sure.
So number one is there's a lot of personal information which is being shared here and analyzed here. Now, the little that I do know about death insurance as it exists right now, they're already privy to a mountain of information about me, which is how my policy was initially established. And to your point, this is how these gargantuan organizations remain profoundly profitable, right? They're making a lot of money based on what? Based on data, based on statistical analysis in aggregate that they then apply to everybody. So how is your setup similar and different from the traditional model? And will I be violating or at least extending more or less information to you to enable any of this to happen?
I think that that's a great question. And I think that my position on that would be you get to share whatever data you feel is comfortable, that is within your comfort level. We get to determine whether you're sharing enough data for us to be able to make a decision, to be able to help you. And hopefully we can meet somewhere in the middle, right? And so the more information we have access to, for example, if we can have access to your health data, it's obviously secured, it's within the right regulatory protocols, and all the right protection mechanisms are set up to ensure that there is still privacy with that. And we use those inputs to determine what your health metrics look like. So what do you look like from a health perspective? We track you in certain key areas. And then what based on psychometrics and behavioral modeling, we determine what your risk appetite is. So for example, if you have a really high risk profile from a health perspective, you're a smoker, you're finishing a bottle of whiskey every single day.
I'm a wingsuit base jumper and a hang glider.
Right. And you finish a bottle of whiskey.
And I drink half a bottle of scotch, a pack of cigarettes, then that profile is going to be a little bit different.
Correct.
Than if I'm a marathon runner.
Yeah.
And I've got equity.
Correct.
Yeah.
And so our view on that, Mookie, is give us enough information for us to be able to take the risk on you and give you access to some of your future death benefits. We don't look at it from a myopic, one-dimensional view of just what is your credit score. And the reason for that is your credit score is just a snapshot of where you are today. It's not a reflection of where you've been. Well, to a certain extent, yes, but it's certainly not a reflection of where you're going. If you take a 25-year-old or a 30-year-old, their credit score might not be great, but they may be a really high net worth individual at some point in the future. Credit score is just a snapshot of where they're at now. So we look at a way more multifaceted approach to calculating your life liquidity score.